Hey everyone, and welcome back to another macro video. In today's video we will be discussing the Federal Reserve's money supply, also known as M2. If you like this type of content, make sure you hit that like button, make sure you hit that subscribe button, as it means oh so much to me. And if you are a fan of cryptocurrency, I have a cryptocurrency shop where you can shop cryptocurrency products. I'll leave a link in the description down below so you can get a nice discount off your next purchase. So without a further ado, let's begin. And let's begin with discussing what M2 means. M2 is the money supply printed from the Federal Reserve from the beginning of the 50s. Well, I believe that the Federal Reserve actually started... Let's actually check when the Federal Reserve started, because I believe it was... When was it? During World War One or World War Two? When did the Federal Reserve start? Okay, 1913. 1913, the Federal Reserve began. So this chart is slightly outdated by 40 or so years, but we have data from 1959. You can see that ever since 1959, this chart has just been going up in a straight line. So what does that mean? It means that the money supply within the economy over time has increased dramatically. Yeah, and we're going to go through an example, especially an example that most of you guys would know, which was during the pandemic, when the pandemic first occurred, this point in time right here, because you can see that there is a massive jump of the money supply since the pandemic closed, since the markets crashed in March of 2020. You can see that around in March of 2020, the money supply for the Federal Reserve was around 15.4 trillion, and it peaked at around 21.51 trillion. So the Federal Reserve printed $6 trillion in just a short space of a year to drag us out of that pandemic recession. I think this is why it's important to know, and which is why I bang on about the Bitcoin dominance so much, because when there's excess liquidity within the economy, when the economy prints a shitload, yes, inflation goes up, which we will discuss in just a moment. When the economy prints a shitload, there's excess liquidity within the system. So liquidity from low risk assets makes its way into higher risk assets. Just like now, where the global, not the global money supply, but the United States money supply, M2, is decreasing. Liquidity from higher risk assets is making its way back to lower risk assets. You can see that in the performance, we get data every month for this. You can see that the supply has decreased by 45.4 billion. So the Fed is essentially reducing their balance sheet, and when that occurs, again, liquidity from higher risk assets make its way into lower risk assets. Just like on the converse, where the Fed prints a shitload, then you have liquidity flowing from lower risk assets into higher risk assets, and that also paves way into the cryptocurrency asset class. Just for an example, when the Fed is printing crap load of money, liquidity is flowing from Bitcoin into altcoins, hence why we received this infamous altcoin rally back in the back end of 2021 and back end of 2020. And when the Fed is reducing their balance sheet, which is essentially what is happening now, that is why the Bitcoin dominance is rising, because liquidity is flowing from altcoins back into Bitcoin. Yeah, right. So that's just a quick knowledge, quick technical to understand. But M2 sort of goes hand in hand with inflation. Yeah, because there's a positive correlation with the amount of printing going on within the economy and how high the percentage of inflation is rising. So if the Federal Reserve is printing money and the money supply is increasing ever so much, inflation will also rise. This impacts your assets, because not only do you need to invest into an asset that retains its purchasing power, you need to hold an asset that not only retains its purchasing power, but also gives you extra returns on your cash. What do I mean by this? So let's say inflation is 2% year over year. If you just hold cash year over year, that means your cash over that year time frame has lost 2% of its value. Yeah? If inflation is 2% year over year and you hold an asset that increases 2% year over year, that means the asset you invested into has retained your purchasing power in fiat currency, because 2% increase coincides with the 2% inflation year over year. If inflation is 2% and you hold an asset that gives you a returns of 10%, that means not only has your asset retained its purchasing power from inflation, but it has given you extra returns of 8% of your cash, meaning you've actually made extra money. It is useful to understand this metric. It is useful to use this metric because you can see your asset's true value in terms of investment. Because let's say, for example, you are checking Bitcoin USD. Yeah. Bitcoin USD, and I don't know why it's like this. Bitcoin USD will likely always trend upwards against its USD pairing. Why? Because the US dollar is losing value over time due to the M2 increasing, due to inflation. Fiat currency will always bleed because of the money supply. And it's simple economics, guys. Demand and supply. If there is a shitload of supply of cash, the demand is just the same with cash. So when there's just a load of supply, it will decrease in value over time. And that is shown through inflation. Not many people understand this, but your asset will always go in an uptrend against fiat currency because of inflation, because of the money printing. So the true way to look into investing is by comparing your asset class and dividing it by M2. And only then you will get the true value of your investment, to see if it's not only retaining its purchasing power, but to see if you are actually making a profit on your investment over time. Ways in which you can do this is if you do BTC divided by M2. And you get a chart that looks like this. So by changing your ticker to Bitcoin and dividing it by M2, you will understand the true value of your assets. So we can see that USM2, well, Bitcoin divided by USM2 is not so dissimilar from Bitcoin USD, and that is because Bitcoin is one of the best assets you could have held since the beginning of its inception. If we now divide the S&P 500, which is the SPX divided by USM2, you can see that I've actually essentially drawn on this chart before. You can see that the SPX is evidently having a breakout against USM2, but comparing the SPX is actually a very, very good ticker to use to understand this metric at its most. Again, Bitcoin divided by M2 is useful, but because Bitcoin has been one of the best assets to hold since its inception, in just a decade, Bitcoin has risen an astronomical amount of percentage. But doing it against the SPX is great, because SPX is an investment where you are essentially guaranteed 10% returns year over year. This is not only to combat inflation, not only to retain your purchasing power, but also to make a profit on your cash. You can see that this chart evidently goes into a straight line. So where we are now, we are at this point right here. And we haven't seen this point since January 2001, during the back end of the dot-com crash. So investing in the S&P 500 hasn't had this value since 2001. So if you invested in the S&P 500 during all this time, yes, you would have made a crap load of cash because the S&P 500 has essentially gone up in a straight line. And I'll show that example in just a moment. The S&P 500 has essentially gone into a straight line as a rocket since the global financial crisis. But when accounting for the money supply, you can see that this chart is in a straight line. So what does that mean? It means that the true value of investing in the S&P 500 is not great. You are not making great returns because of the amount of stimulus being pumped into the economy. You can see that the S&P still hasn't even made an all-time high against its own metric when accounting for inflation, when accounting for the money supply. So what does that mean? It means that it is not as it seems when comparing SPX against the US dollar. To understand the true value of your assets, compare it against the money supply. Yeah, that is my message for today. Anyway guys, I hope you all enjoyed the video. If you did, smash that thumbs up, smash that like button, and as always, it's been your boy, J1 General. Thank you and goodbye.